Welcome back, Focus Learners. Today, we're diving straight into the numbers and narratives from the August 27th, 2026 RAPI Report Trade Diamond Index. I was just digging through this RAPI report, and there is a really fascinating story unfolding right now about a cautious market recovery and, honestly, even more surprisingly, an absolute breakout for elongated fancy shapes. Let's uncover exactly what's going on.
Okay, let's dive into this with a quick question just to test your market instincts. Think about all the cuts out there right now. You know, the classics, the moderns, the brilliant squares. What do you think is currently the absolute most expensive fancy diamond shape on the market today?
Believe it or not, it's the marquise. Honestly, if you guessed marquise, you are paying incredibly close attention to current supply dynamics. The marquise is officially the most expensive fancy shape on the market right now, and this perfectly sets up the entire focus of our explainer today. There's this massive, really unprecedented demand for elongated goods, and we're going to break down exactly why buyers are suddenly clamoring for this specific aesthetic over everything else.
So here is our roadmap for today's explainer. 1. A cautious market recovery. 2. The elongated fancy boom. 3. The quality and cut premium. And 4. A global trading hub's outlook.
Starting with Section 1, a cautious market recovery. Let's look at the index trends and macro moves.
While the final stretch of the summer holiday has definitely kept trading hubs moving pretty slowly, a cautious recovery is undeniably underway. Now, what's really interesting about this data is the specific pocket of growth we're seeing in the short term. Just look at the weekly column. The 0.50 carat diamonds saw a 1.09% weekly growth, which means they're actually starting to outpace the 0.30 carat goods, which are sitting around 0.98%. Also, check out the 1 carat categories. They're showing a 0.10% weekly and 0.30% monthly uptick, finally rebounding after some recent declines. Meanwhile, your larger diamonds, the 2 and 3 carats, well, they're remaining relatively steady. So the high-end market overall remains quite solid, and it's really leading this cautious step forward.
Beyond the specific index percentages, there's some major foundational news driving these macro trends. First off, the rough market is actively tightening following some very strategic supply cuts. And interestingly enough, on a broad, generalized level, round diamond price trends are actually still beating fancies overall. But the global infrastructure is shifting too. Al Rasa is planning a brand new diamond cutting cluster in Smolensk and Yakutia. Plus, the Qatar Diamond Exchange just signed a memorandum of understanding with bourses in Singapore, Shanghai, and Tokyo. That signals some serious future market connectivity.
Moving right along to Section 2. The elongated fancy boom. Let's talk about high demand and short supply.
So while rounds might be winning on the macro level, zooming into the specific fancies market reveals a highly lucrative story. Long fancy shapes, specifically your ovals, marquises, and emeralds in the 2 carat and larger categories, are moving exceptionally well. But why do they sell so fast? Well, it comes down to a perfect storm of a highly desired elongated aesthetic and just severe scarcity. High-quality marquises, for instance, are in incredibly short supply right now. We're also seeing that long radiants and long cushions are heavily sought after by buyers. And just as a quick aside, antique cuts and styles continue to remain a very hot category too. Ultimately, buyers are hunting for very specific aesthetics, and that elongated look is absolutely dominating.
So, the crucial point is this right here, 20 to 25%. Because of this targeted, intense demand, long cushions are incredibly easy to sell right now, and they are trading at a massive 20 to 25% premium over traditional square ones. If you've ever wondered why elongated fancy shaped are the talk of the trade lately, well, it's this premium. The market is happily paying a quarter more just for those specific elongated proportions. Now, just to offer a quick contrast to that booming elongated market, let's take a look at the princess cut. The report does note there are finally signs of renewed demand for princesses after a really long period of weakness. But unlike the long cushions or marquises, this renewed interest hasn't actually translated to pricing power yet. Princess cut prices remain stubbornly low, which brings us to Section 3, the quality and cut premium. This is the ultimate dividing line. You see, securing the right shape is really only half the battle today. The actual quality of the cut is the dividing line in this market. And this brilliantly illustrates the current reality on the trading floor. On one hand, very well-cut fancy shapes are incredibly difficult to find, and because of that, they are commanding steep premiums. The market will gladly pay top dollar for the perfect make. But on the flip side, if you have fancies with bad proportions, they are entirely illiquid, literally just sitting on shelves gathering dust. So why do elongated shapes sell?
They sell because when they are cut perfectly, they are a rarity that the market desperately wants, which leaves those poorly proportioned stones completely out in the cold.
We're actually seeing this exact quality dynamic playing out vividly in the US market right now. The US is showing solid demand specifically for elongated ovals with great shape and quality, particularly in those D through I colors and VS through SI clarities. Wholesalers there are already shifting their focus toward prepping for the holiday season. Now, what's truly fascinating here, and honestly it's a bit of market irony, is how the broader market is adapting. The exceptionally low prices of synthetics are actually supporting differentiation. It's helping the natural market clearly separate itself. As a result, we're seeing broad, really solid US demand for large natural diamonds, and even orders for natural diamonds under 1 carat are starting to pick up again.
Let's wrap things up with Section 4, the Global Trading Hub's Outlook. We're moving from summer lulls straight into trade shows. As we transition out of those quiet summer lulls and look ahead to the upcoming trade shows, we're seeing these trends play out quite differently depending on geography. Starting with Belgium and Israel, both markets are experiencing that typical summer quiet. Very few dealers are even back from vacation just yet. But over in India, the market is stable and actually firming up. Tight rough supply is really supporting their polished prices, and round 0.30 carat diamonds are their most sought-after category right now, largely driven by that US demand we just talked about. However, it's definitely not all perfect for India. They are seeing notably low demand from Hong Kong, a situation that's unfortunately been exacerbated by a diamond crisis occurring in Vietnam.
And speaking of Hong Kong, their domestic market is currently a total tale of two sectors. Finished fine jewelry is performing very well, with people actively buying completed pieces. But conversely, the loose stone market is moving remarkably slowly. It's a really challenging environment right now for loose diamond traders who rely strictly on local foot traffic. Let's move to and see how this builds, because what is actually managing to sell in Hong Kong? Well, for the loose stones that are moving, buyers are incredibly particular. The best sellers are round and long fancies, again, specifically oval, marquise, and pear shapes, mostly in the 2 to 5 carat range. Furthermore, buyers are absolutely insisting on eye-clean goods, strictly hunting for D through G colors and internally flawless to VVS clarities. There's also a very solid pocket of investment demand for massive 5 to 20 carat round, pear, and oval stones in top D to F colors. Meanwhile, the smaller commercial goods in Hong Kong, they are actively losing out to synthetics right now. Looking just next door, the broader Chinese retail strategy is currently highly cautious. Chinese retailers are intentionally keeping their inventories lean ahead of the big September shows. When they actually do buy, they're strictly demanding round, pear, and oval shapes, and they're concentrating heavily in the G to H color and VS clarity ranges. They're simply not taking big risks on inventory right now. But look, all eyes are on the near future. The upcoming Jewelry and Gem World Hong Kong show, running from September 14th through the 20th, is the next major catalyst. Even with Chinese retail demand appearing pretty low right now, traders are actually expecting a very strong overseas turnout for the event. Given all the trends we've just unpacked today, you can absolutely expect the focus on the trading floor to be heavily weighted toward those high-end, eye-clean, investment-grade stones. Which leaves us with one final major question as we look at the weeks ahead. Will the September Hong Kong show solidify the reign of the elongated fancy? With the massive 20 to 25% premiums we're seeing and high-quality marquises in incredibly short supply, these upcoming Asian trade shows are going to be the ultimate proving ground. Thank you so much for joining me for this explainer, Focus Learners. Keep a close eye on those proportions and keep learning.